Co-Chief Investment Officer at Birla Sun Life, joins us now in the studios. Mahesh, good morning. Thank you very much for dropping in. Well, the market's now preoccupied with the exit poll numbers that will come out by 6 o'clock today. What's your sense? If it is an NDA victory, does it reset fundamentals? On the other hand, if it isn't, does that also reset fundamentals, because the central government will not only not get its expected majority in the Rajya Sabha, it also may become a little populist?
No, I think purely from a fundamental perspective, I don't think the election is going to really matter much. Okay. It's going to be mainly sentimental, because I think irrespective of whatever is the election outcome, I think post the election, you should expect the government to really work on its agenda in terms of passing off a lot of bills, focus on execution. I think that's most important. While big ticket reforms might get delayed, if at all, depending on the election outcome. But I think that is not what is really important at this point in time. I think clearly what is required is execution at the ground level. And we have seen the government, the momentum has picked up a bit. Okay, we have seen government spending pick up. And if that accelerates post the election, the government will focus on a few things. There are a couple of important bills, which are there, or reforms, I would say, in the power sector. There's the bankruptcy bill, which is going to be tabled in the parliament. And if these things are taken ahead, I think that will be what market will look at for. Obviously, if there is a disappointment over there, you could see a minor reaction, but I don't be too worried about that.
So if there is a minor knee-jerk reaction in case of a disappointment, you would advise investors to use that as an opportunity to buy? Yeah, surely. I think clearly the broader, if you look at where the market stands as of today, on the global front, we are seeing things have kind of normalized. Okay, the concerns in China are now kind of slightly behind us. We have seen even the trade in the emerging markets, which was played out in the early part of this calendar year, is kind of turning around now. And domestic side, we've seen the earnings season go by, which was kind of a worse quarter, I would say. Okay, so second half onwards, you should see, if nothing else, at least on a YOY basis, I think should look much better. So I think while we don't expect any major turnaround in the earnings, but looking at where the market is, where the valuations are, I think any correction from these levels would be a good level for someone to accumulate at these levels.
At your own end, this season you had more upgrades than downgrades?
I would say upgrades than downgrade, but on overall, if you look at the numbers, most of the number, I think more than 60% of the earnings which have come until now would either be in line or slightly better. Which is a good sign, I would say. I think a lot of surprise came in mainly at the margin level, where we see a lot of companies where the EBITDA margins have been better. I think primarily because of the material cost, the commodity price fall has to an extent benefited the gross profit margin. So I think, and I think you will see is going forward also the cut in interest rates, that would also translate down to the PBT level. So I think we have yet to get some results from the PSU banks, which will come in tomorrow, most of them. So I think that's something which can, but that's not going to impact the overall earnings. Yeah.
Okay. The space that everyone is watching today is the power space. You know, we have all these stocks that are gaining quite a bit, whether you talk about Tata Power, Adani Power, Rail Power. The cabinet will take up the DISCOM resolution today, and the Power Ministry is working on a proposal to deal with, the stressed assets, etc. Is this a space that you like, and should a long-term investor really look at this?
The power sector has actually gone through a lot of troubles. We have seen a lot of on the policy side. We have seen issues on the fuel supply side. So I think some of the issues are getting addressed, especially even on the fuel side. I think we have seen now coal India production has been pretty strong. Even imported coal prices have come down. So if somebody is at the coastal level, he can also import. So I think that's not a challenge. The challenge has been in terms of the demand side. I mean, the offtake from the SEBs, because the SEB health hasn't been that great. The finances were not in proper shape. And we have seen a slowdown on the demand side, or probably from the offtake side, as you might put at it. So if that is addressed, in this bill from the SEB reforms and the DISCOMs in terms of, I mean, they're talking about restructuring package for some of the stressed state electricity boards. I think that should improve scenario, or at least on the demand side. And to that extent, I think some of the stock companies where they have got proper linkages in place, PPAs signed, I think they should stand to benefit a bit. But we don't see a big re-rating in this sector, really. Okay. It's more of a kind of a value trade which one can look at. And obviously with interest rates going down, with cost of capital or cost of equity being low, lower, yeah, there is some kind of a valuation re-rating which is there for some of these companies, because normally get valued on a price to book multiple.
At the end of the results season, I mean, we are almost there. We are probably 80% through. How are you likely to tweak your sectoral distribution?
So I don't think there's any reason to change our stance. Okay, we have been slightly pro. I mean, our focus has been mainly on the domestic cyclicals, and expect the two broad themes which we have been playing. One is the increase in government spending, especially in areas like road, railways, and other infrastructure, which will drive down for some of these construction companies, and also to some other players. And broadly, we believe that the urban consumption is something which is likely to pick up. And there are some early signs of that which we have seen. If you look at the commentary which was there from some of the companies, I think in the month of October we have seen the festive demand, which was supposed to be weak, has been slightly, expectation is slightly better. In fact, the same store sales growth for some of the retailing companies has shown a good pickup over there. And as we see that the real wage growth is positive, we're seeing the job data also, urban side has shown an improvement if you look at some of the job sites. So given these factors, I think that's a theme which will, will play out. We obviously have the pay commission coming in the second half of next calendar year. So these are the two broad themes which we think will play out. And I think while the quarterly numbers haven't been too great for some of these companies, our belief is that they should play out in the next few quarters.
Urban consumption and which other theme?
Infrastructure.
And government spending related theme, whether, yeah.
Because, I mean, the L&T numbers were not very positive in terms of...
so L&T is not... See,
L&T
has got exposure in the overseas market. In fact, 30-40% of the books in the overseas where there is a slowdown over there. In the power sector, we haven't seen much of a uptick over there. So I think while L&T is a broad, large infra, I think government spending is mainly focused in India, like road, railways. I think, so we could look at companies which are directly linked in terms of orders, or indirectly it could benefit sectors like cement and other sectors. Yeah.
But what do you do with a stock like L&T? Because, you know, the problem is that patience is now wearing out. I mean, 6 months back, there was an expectation of a pickup in the capex cycle. That has not transpired. In fact, L&T's order inflow has gone down 30% in this quarter. And it's, you know, it's sitting at a 52-week low. You have that stock as a key holding in one of your portfolios. What does an investor do now?
So I think, again, I wouldn't talk specifically about L&T, but see, broadly, these are, companies, large leaders in a particular space. When we look at these companies, we look at slightly from a longer-term perspective. Okay, so it's not like, agreed, in the near term, the order inflows haven't been that great in some of these names. But look at companies' capabilities. Okay, if there is a large infra project which has to be built, these are one of the companies, okay, which would be the forefront runners for that. Also, we expect a lot of orders to flow in, though nothing has materialized as of now in the defense sector. Okay, where there are a few companies which have got capabilities really to do domestic, the Made in India theme which the government is talking about. So I think it's a slightly longer term view which we would take in some of these names, not necessarily in terms of the near 6 months or 1 year view is what we look at. So I think from that macro perspective, if you look at a 3-year view, I think we should see a lot of development happening in this space.
How will 2016 pan out for the Nifty itself? Do you think the growth numbers will look better? So should we expect a 10%, 20% rise at an index level?
So as I mentioned earlier, clearly we expect the second half of this fiscal year itself should be much better than what we've seen in the first half. Again, simple numbers, if you look at the consensus number, for this year is after the downgrade has come down to around 11-12%. The Bloomberg would show a slightly higher number. It's come down from around 18% to 12%. And the first half number is almost kind of flattish, right? So that means the second half has to be much better. But having said that, I think FY16 itself, the earnings number, I think a lot of things will start to play in. This year we have seen the big, at least the first 9 months, big impact or disinflationary impact which has been there on the top line. So top line growth has been negative. That should not continue. I think you should see that normalizing. And margin improvement, interest rate cuts. So I think the earnings growth trajectory, it's anybody's guess, but I think there's a greater confidence that it should be somewhere around 15%, 20% in that range. Okay. So I think with valuations near to long-term average, I think the market should at least return in line with earnings growth. What has happened up till now is that every year we have seen that growth expectations have been there and it's been
Much
below,
higher
it's much lower. So I think this year, at least a lot of things are in favor and we are seeing some early signs. So I think the probability of earnings coming through is much higher. And the market should at least return in line with earnings growth.
Okay, you know, in your infrastructure fund, I was just going through your holdings. You have a high percentage of holdings in the private banking space. So whether it's ICICI Bank, HDFC Bank, and even some of the smaller ones like Federal Bank. We've seen this whole onset of payment banks and small banks, you know, threaten the existence of some of these smaller private banks. Would you sort of move out of the smaller names and get back into bigger names, or do you still stick with these names like Federal Bank?
So I think our strategy on the banking side has been to look at banks, okay, which have got not only a strong liability franchise, okay, which could be in terms of the CASA ratio, the retail deposits, but also on the asset side, okay, which are strong in a particular area, whether it is retail or any other niche players. So I think that is going to be key in terms of banks, okay, which are going to do well. And should we also be able to protect their NIM. We see some pressure on net interest NIMs for the banks because of the RBI regulation in terms of repricing the liabilities much earlier on the marginal deposits. So I think banks have got a slightly better on the asset quality or the asset side flexibility in terms of pricing it much better. I think they should be able to sustain that. And
that's a loaded condition. I mean, you said strong in retail assets and retail liabilities. That's only one HDFC bank.
No, but I mean, it's a question about where the delta change is happening, right?
Okay. Exactly what I was asking. There are some delta changes that you're noticing in some of the public sector banks which have not reported a worsening of their asset quality.
Right.
So are PSU banks getting a look in from you? Because delta could be higher there.
Yeah, so as I rightly said, it should be the delta change, and because the pricing spectrum varies a lot in the banking space. You have banks which are at 3.5 times book values, okay, there will be others that are around 0.7 times books value. Yeah. So I think we would, up till now we have been mainly in the private sector banks. We are looking at PSU banks, but very selectively, really, because I think PSU banks you have to look at, I think the asset quality issue is still not really behind us. I think there are a lot of deleveraging which needs to happen in that sector. And obviously, it's important to even look at who's driving the bank. I think leadership is also very important. So I think selectively, I think, we are looking at some of the PSU banks.
All right, Mahesh, we'll let you go on that note. Thanks for giving us all of those views. Well, that's the word coming in from Birla Sun Life. They say if there is any adverse reaction post the Bihar elections, then use that as an opportunity to buy into this market. But one